Most traders lose money on gold because they chase candles. But what if I told you banks leave footprints before every big move? Today I caught a clean sell on gold using one simple concept: fair value gaps. No indicators, no guessing, just smart money imbalances. And if you don't know what a fair value gap is, don't worry. In the next few minutes I'm going to break it down so simple a beginner can understand. By the end of this video, you'll know exactly how to spot them and how to use them to enter trades like this. Let's get into it. Alright, so first of all, before we start trading, we try to figure out what time we're in. Best time to trade gold is at 8 a.m. Eastern Standard Time to 11 a.m. Eastern Standard Time. That's the New York Hill Zone. So you can look for entries around that time. Alright. Cool. I've already gone ahead and made the trend lines around that time. Then we're gonna go through the whole entire the different time zones and different time frames to see exactly what fair value gap we could use during this time. So right now we see that gold is in an uptrend. Alright, so when I went on the 4 hour, I noticed that it's just right now it's just ranging. It's not really doing much. Doesn't look like it wants to go up or down. So I went on the lower time frame to see a better picture of what's going on. Alright, so during this time I saw that around 9 o'clock that there was a fair value gap up here. So I went ahead and drew out a fair value gap around this area right here. Okay. Right. Then I waited for price to go into that fair value gap. And then I went into the 15 minute. Right. On the 15 minute, I noticed that price was making higher highs and higher lows. Price finally around 8 o'clock, it finally pushed into that fair value gap. Right. And then as soon as it pushed into it, around 9 o'clock, 9:30ish, that's when they started making a downtrend. Right. So the closest liquidity I saw around this time was on the hourly, which was these equal lows down here. So what I did was I marked up the equal lows, sent it out like this. Then as soon as price went up into that fair value gap right here, I waited for it to come back down. So as soon as it went into that fair value gap, it dropped down here at 9:35, 9:30ish, and then that's when I entered the sell towards those equal low liquidity. Okay, so when that happened, I went on the 3 minute and I put the stop loss above here, and I waited to see what happens. And right at 9:30ish, that's when price dropped, took out these equal low liquidity to the left, and then finally started going back up. So this happens normally at the same time, or around the same time. I think the best time that price really starts dropping is around the 9 o'clock to 10 o'clock time. I think that's when gold really starts moving. Just from me back testing, that's normally when it happens. It could happen around here, around 8 o'clock. So I'm not going to say specifically around 9 o'clock. That's just the best time that I've normally seen price start moving. As you can see now, that's when price started moving to take out these equal lows. Okay. Yeah, that's it. If you guys wanted to check out more of my videos, I have more videos on the channel to look at fair value gaps and how I enter them and the best times to enter them. Normally I enter around the same times. If it's not 8 a.m. Eastern to 11 a.m. Eastern New York kill zone, or 3 a.m. to 5 a.m. Eastern London kill zone, then I don't enter. Notice how as soon as it hit that fair value gap, it just went straight to that liquidity zone around here. Yep. Alright guys, see you guys in the next video.